Our trade on Gap stock is now more than 100% profitable because the stock gapped up again 28% as we predicted based on our data analysis when we analyzed the unusual option activity on May 10th in this video titled GPS stock gap up again, $887,000 earnings trade. So if you missed our video, we will put a link at the top here. Watch it if you want to learn more about how we pick stocks that will gap up. Subscribe and hit the bell icon so you get notified immediately when we share these profitable opportunities. Now, how much profit did we make on this trade exactly? Let's take a look at the trade in more detail. You can see that these were the June 21st options at the 23 strike calls. They are now deep in the money now. And the 27 strike calls as well. So when we take a look at the profit loss graph here, you can see that this vertical call spread originally cost $123 of debit each. And you can see the profit now, $238 of profit per trade. And so when we calculate the profit percentage, 238 profit divided by the cost of 123 times 100 for a percentage, this is 193% profit. So if you want access to more of these stock picks that have a higher chance of gapping up to become very profitable, then go to our website. We'll put a link at the top here because it is very important to diversify with different stocks that have this type of potential, because not all of them will be winners. In this trade, we started taking profits by closing out our contracts for two reasons. The first reason is the data. As we can see from the options, time, and sales tape, there was actually some profit taking for the same options that we were trading. You can see it over here. Right over here, June 21st options, 23 strike calls and the 27 strike calls, the same ones that we are trading, right? You can see what they're doing here. Selling the 23 strike calls and buying back the 27 strike calls. They are closing out of this trade. You can see this spread here. And when we take a look at the chain for these strike prices, you can see there's a total volume of 4,000 being traded. So they are closing and taking profits as well. So we always take a look at the data and follow the data. We're very data dependent on this type of strategy. Okay. And the second reason why we started taking profits and trimming our position is because if you take a look at this profit loss diagram, we're currently profit right here, and our max profit is this blue line. So we don't have much more profit we could make. You can see the distance that it could make is very small in comparison to how much we could potentially lose, because this is how much we could lose here. The blue line here, all the way down here to the negatives here, right? So this area is a lot greater than this profit reward area here. So you can see that if gap stock pulls back, goes down, we could potentially lose the max loss, $123 which is the initial cost of the trade, right? So the risk is much higher now. So we always take a look at our risk to reward ratio, and the current trade now has a smaller reward in comparison to the risk. So when we have a risk to reward ratio that is not in our favor, then we want to start taking profits, closing out of trades, and also perhaps readjusting our trade to make sure that the risk to reward is in our favor. And that is what we do based on the unusual option activity data. So if you've been picking stocks based on unusual option activity and you're not profitable, one thing to keep in mind is that not all the analysis results are the same. Not every website or scanner out there can read it correctly. All this data that comes in, and also the market variables outside of just this option time and sales tape, is also very important. And so these other websites and scanners, they don't read all of this. Most of them are simply automated for quick output without analyzing these other market variables to get more accurate analysis of what wealthy investors are actually doing, which is why we put a lot of time to analyze more data to decode the trade signals, to make sure it makes sense from the standpoint of wealthy investors who make better financial decisions, which is why the rich get richer. And by following their trade decisions on Wall Street, we can also make money too. So this is another real example proving we keep winning with our data analysis and our strategies, because we can accurately analyze unusual option activity to pick better stocks that have a higher chance of gapping up. So if you're sick and tired of losing consistently, witnessing losses after losses, or perhaps you're not losing, but you're stuck at break even for the longest time, and you want to know what's the secret to becoming profitable, then go to our website to learn more, to gain access to these types of possible insider trades with a higher chance of profit. If you missed our initial analysis video on May 10th, make sure to watch it. We'll put a link over here to learn how we predicted the stock would gap up again. Please smash the like button. Take care and have a great weekend.